What's up? Good morning, guys. How we doing? Let's get to work. Chris, other Chris, Curtis, Roy. What's up, guys? How we doing? Good to see everybody here. We'll let the regulars pour in here and we will start looking for setups. We have a minute 30 out until the rollover here, this 2-minute bar. We're very clearly in a range as we speak. Might as well draw it out here. Draw it approximately like this, approximately like that. Don't overthink it. Pretty clear. Redneck, how we doing? Taz, Javaz, good morning, guys. Tom, what's up, brother? How we doing? All right. Now, we are backfilling this range in typically, well, at least as of more recently, 1 to 2 bars, okay? So let's see if we get a bull bar here closing near the high of the range. Even if we do get that, it would be a strong bull bar, right? In which case, I would short it still. Because we're in a range market, right? Not a trend market. Wolf, good morning. Sidonia, what's up? Kane, Scott, how we doing? All right, 26 seconds out. Let's see what we get. Big wick backside here. Bears wicking it back. Inside close. Big old wick. Next bar. Let's see. Christian, good morning. How we doing? Yeah, John, listen, the emotions are different when you get funded. But it's the same thing. Really is the same thing. All right. By the way, ATR is holding up. We're at about 24 this time of day, which is this increased volatility we've been seeing as of late is very, very good. I mean, if you look at the daily chart, bottom of your screen, that of course shows New York sessions only. The volatility increase has held up. This in here, this small little volatility, we were able to do all right, but it's just brutal when things move that little. We picked up and we've held it. So for the next, if we could hold this volatility for the next few weeks. Yesterday, things started to fade a little bit earlier than is normal, at least as of late, these past few days as far as volatility, but it picked back up a little bit in the afternoon. All right, 5 seconds out here comes the rollover. Okay, 2 minutes out, of course. 60 seconds out, I should say 55 from the rollover here, the 5-minute bar. Not a whole lot developing so far here on the 5-minute. At least on this bar here. Very, very small bear body. Inside close on the previous 5-minute close. So back to the 2-minute it is. What's up, Benjamin? How we doing? James? Good morning. Yeah, Gaines, I saw you post in the free Discord. All right, right now, really just looking to see if we can get a nice, strong bull bar closing near its high toward the top end of that channel. Again, it's always a range, never an exact level. But if we can get that, I would like to sell that rollover. Hey, Gaines, you passed those evals? You did, man. Good work. That's how I do it, too. I start a little bit bigger in the evals. Not nearly as big as most people even trade in the fundeds, man. A lot of people are trading 7 to 10 contracts in a 50K Apex PA account, which is ridiculous, and they're doing that on purpose. They let you do that to bait you. But big for me in an Apex 50K eval, for example, is 3 NQ. Then I size down to 2 when I get to halfway, size down to 1 when I get to maybe 2,500 bucks. Cross the finish line. And then once you get funded, it's 3 to 5 micros. All right, 30 seconds out here. See if we get back-to-back doji closes here out of the 2-minute. All right, come on, Bulls. Give us a nice clean close up top here. Get nice and cocky. And let me fade you. I'd like to see a close probably above 40, but inside of this wick high. Hey, Corey, good to see you. How we doing? $60 seconds out here. Gonna need this to close nice and high inside this channel. Get those bulls feeling good and then bet against them. Is my plan, at least. Yeah, Curtis, unless something's going on. It's your job, man. You gotta go to work each day, right? Carlos, how we doing? All right, here comes the rollover on the 2-minute. Man, the third doji close in a row here. I'm not a huge fan when this kind of thing starts happening. You know, the bulls are actually struggling to even get it maybe through halfway the channel, or at least into the upper third, right? I mean, you could have made the same argument back here, and then of course we ended up just not quite as clean as I'd like. Plus, being a, you know, kind of a soft bear channel, you know, I'd prefer to short the high rather than get long on the bottom. Kira, why not buy the deep? What's the difference for you? Well, for me, the difference is a slightly higher probability of success on the trade to short the high in a bear channel and get long near the bottom of the channel, the bottom third, in a soft bull channel. It's just the probability is slightly higher, all else held equal. Doesn't mean I'm against buying the low. We just don't have that setup yet. Home! Passed another 3 take profit accounts. Good work before New York Open using code BIG, baby. Yeah, man, those take profit pros are a hell of an asset. Daily payouts. If you're in a position where you're like, okay, I'm trying to bootstrap going full time, you need money coming in. You need money coming in now. Life is expensive. Right? Scaling, maybe it has to wait. Apex is by far the best for scaling. I love Apex. Apex is great. You can take it to 20 accounts. Fantastic. But if you're like, well, I'm working a job, I'd like to quit my job and trade. How do I bootstrap going full-time trading in a reasonable amount of time? Here's my timeline that I think makes the most sense. If you're day one trading, buy a cheap Apex eval for like 30 bucks. Find your edge in that eval trading 1 micro. Then when it's time to step up and trade for real, I would go to Take Profit Trader, try to get as many of those as possible. You can have up to 5 pro accounts at Take Profit Trader. And then show up every day and try to perform. Maybe if you want to trade them in 2 different groups just to maybe even out that equity curve a little bit, get money coming into the bank. You can request daily payouts when you're above the buffer in a Take Profit Trader Pro account, which is very good. Then when you're like, okay, I'm actually generating relatively consistent revenue. Now it's time to scale this thing so I can actually quit my job and feel good about that. Go to Apex, scale using Apex. When you've maxed out both Apex and Take Profit Trader, or at least you're near the max out, then start going to different props and continuing the horizontal scaling process. I'm telling you guys, to me, that's the clear way to go about this. If you're somebody who's like, okay, I'm working a job, I don't want to be working this job, I'd rather trade. How should I get started? That's what I would do. Damn right it does, Tony. Code BIG now gives you the best deal always at Tradeify. And by the way, I know some of you guys are gonna be like, well, when do you push to Tradeify? What I all said before stands. To me, Tradeify is when you know that you would get a positive ROI on your accounts, or you're pretty damn sure you're getting a positive ROI on your accounts, and you no longer want to spend the opportunity cost that it takes to get funded through evals. Tradeify has the lightning funded accounts, and they're not that expensive for the opportunity you're getting. So if you have a positive ROI on average, you think you have some kind of statistical edge here. The price that those things are right now when you use the code is I'm buying them. Mark says, what is your edge? Hey, Mark, you got about 2 years for me to sit here and explain that to you? Watch the stream, brother. This is not, I trade this breakout setup and make a living in 3 minutes a day. This isn't 2014 online trading advertising. That's all bullshit. Everyone knows it by now. All right, minute 50 out here. Jeff says, do you trade the Take Profit Trader test accounts the same as your Apex evals? No, not really. The more, kinda. The more expensive Take Profit Trader initial cost keeps me from trading them as aggressively as the Apex accounts. Yeah, that makes sense. And it is taking me forever to pass. I still trade the Take Profit aggressively. Because just to be straight up, again, when you average a positive ROI, average per account, some are going to have a ridiculously high ROI, some you're going to blow in 3 days. That's just the way it is. With Take Profit Trader, again, opportunity cost is my number one concern, not the cost of the eval. That's how you need to look at this if you're going to turn this into a largely profitable venture for you. Again, I get it. If you're bootstrapping, take your time. But once you're into the business of this, if you're like, I don't want to lose my $32 eval at Apex, it's like, good God, are you here to make 20 bucks or are you here to provide? Need a little thicker skin, man. This is the big leagues. This is business. You should have a business model for your prop trading, right? You got to think bigger than your $33 50K eval at Apex. Doesn't mean blow it, doesn't mean gamble it. Trade it responsibly, but don't spend 3 weeks in the thing because you're terrified of losing 30 bucks. However, my Take Profit Trader evals, I try to get half the profit day 1, half the profit day 2, and then I flip the remaining 3 days. If I don't hit that profit target on day 1 or 2, then I spend day 3 or day 4 trying to get back to it. But assuming I hit halfway day 1, halfway day 2, then I just flip the remaining 3 days because it's easier that way. It takes less mental capital. All right, minute 20 out here from the close of this bar. Mario says, what's your opinion on Bullinox? Okay, I think I like Bullinox. I have an account. I haven't traded it yet. I bought my first ever, what do they call it at Bullinox? Qualification account or something? At Bullinox. I bought my first one from Bullinox ever yesterday, maybe the day before. I took like one test trade in it just to make sure it was connected properly, and I haven't traded it yet. I will one of these afternoons. I'll just try to pass it. The one thing, my one complaint about Bullinox here, I really like it so far. I think it to me it feels like Apex without quite as many rules. But the evals are more expensive, probably because there's less rules once you're funded. Which is like, it's fine. But my one complaint is I have to switch the connection from Apex to my Bullinox connection because they're both plugged into NinjaTrader with Rhythmic. Now it's fine, it's not that big of a deal, but I don't like inconvenient things. That goes for everything in life. So, if anyone has a way, and I knew this by the way going in, it's not like this was a surprise. If anyone has a way, by the way, watching this bar 60 seconds out, let's see if we get a nice high close, in which case I'll short that. If anyone knows of a way to, maybe there's a plugin that lets you have both connected at the same time. I don't know, but it seems ridiculous that you can't have multiple Rhythmic connections connected at the same time. Again, I already knew this going into it, I mean, but it'd be nice to not be having to switch back and forth all the time. All right, minute 52 out here. Let's see if we can get a nice high close. Nothing in this channel yet. Still watching this, by the way. Though, I gotta tell you, sometimes these little flat tops halfway in the channel end up turning into the top of the channel as it continues. Which is another factor that helps us out, puts it more in our favor, right? Alright, Angelo, I got you, brother. Just reply to that first text. And I'll hit you back later on. Come on, bulls. Give us one little bar. One little bull bar that's not shrinking here, closing near the high of this little range. I don't care if it's a little outside. I don't care if it's a little shy. Just give me something reasonable here that we can work with. And I will sell that rollover as long as it's within reason. right, 15 seconds out. Copy trader engaged. Come on, bulls. Have a little backbone here. Do not close this thing as a doji. All right, here's what we're gonna do. We'll go a few ticks above, and we'll place a limit sell up top there. Now volatility has slowed quite a bit, tremendously on these last 3 bars. So I'll give this another 10 seconds, see if we can get a fill here. Yeah, nothing there, pulling on back, pull it. Next bar. You guys know I'm not a big fan of leaving limit sells or limit buys out for too long on entries, because especially when you get news, what can happen is it'll give you a fill and it's going against you with limit order scalping. It's going against you when you get a fill, right? So if we get news and you get a fill, it could just instantly stop you out for a huge slippage. Whereas I'm cool with stop limit sells as short entries and stop limit buys with long entries, leaving those out for a longer period of time, because if it does get news and fill you, it's already going in your direction. So the damage control is a little bit easier to manage. I know some people, like, they'll be like, okay, I want to get long down here. So they'll just put out a limit buy and just leave it for like an hour. Fine, but especially during tariff talk, man, I don't know. I'm not into it. Joe, what's up, brother? How we doing? All right, but I do like the way this is setting up, I gotta tell you. 20 seconds out. Little range here is plenty wide. Don't grow too much. Hold it right there, bears. There we go. Got a fill. And I will place my stop. Boom, right there. And let's see if we can backfill the last part of the range. I almost don't even want to have these lines out, because I know that some people are going to look at that as kind of an exact science. It's not. These are ranges, okay? But you got to draw it as some kind of line, right? So let's see if we can, if the bears can backfill the bottom portion of that range. If they reclaim that little flat top, then I want to be out. Now, by the way, you could, some people could justify putting their stop above this curl. I don't want to give it that much room. Because the downside potential here is not quite as large as it could have been if that bear bar was a little bit smaller. If that bear bar was smaller, I would have given the stop to the other curl. Just for a look inside my head here. All right, ATR is about 20 right now. Beauty. Beauty. Got about 3/4 of an ATR. All right, we're up 1,500 bucks. First trade of the day here. Let's move on. $25 seconds out here from the close of this 2-minute bar. Bulls wicking it back up pretty much right away here. Dromisha, don't say that. Don't say that. Be careful. Careful what you wish for. ATR is 21. Man, we've seen ATR of like 6. If you start talking too much shit about volatility when it's at, a 15, 20, 25 ATR, it'll dump off to 5.5 just to spite you. So be careful. Please. All right, 90 seconds out here from the rollover of this 2-minute bar. What's up, Clark? How we doing? All right, 45 seconds out. All right, now. This kind of scenario, there's a lot of things going through my head. We just took out the little low that was recently formed. Couple of stops that were already there got triggered. We're 30 seconds out from a rollover here of this 2-minute bar. If this closes near the low of this bear bar, that would be 3 consecutive relatively strong bear bars in a range. Now, could I get long? 100% I could get long if we saw that. There's one little problem, and that's how do you manage the risk? Because we're at low of day. How much room do you give it? Well, you could give it about an ATR. I'd probably give it about 20 points. Let's see what we get. Too much of a wick. Not low enough. Next bar, 2 minutes out. Yes, sir. We are trading off a 2-minute chart today. Well, pretty much every day, unless we're on a 5-minute. Vinny! Nico, could you explain why you prefer full-bodied candles for a reversal scalp? I understand why for continuation. Well, Vinny, that's not necessarily true. Okay, actually, if you look here, I put a limit sell right above that smaller body, because if I'm getting short, those shrinking bull bodies are actually a good thing for me, right? But if we're in a range, I also do like if the other side is getting cocky, because what that oftentimes leads to, remember, we're scalping. I want to be in the money as quickly as possible. It doesn't always work that way, though, as much as we'd like it to. But ideally, on a perfect scalp in a perfect world, I would like to be in the money as quickly as I possibly can be. So oftentimes, big full-bodied bars that close at the outside of the range pretty much, or very near that region, can give you a little bit of a quicker rubber band snapback-like effect. But it certainly isn't as important on a reversal, at least to me, as it is on continuation, where it's 100% crucial. All right, let's see here. See if we get kind of a similar setup to the long side that we just had to the short side. Inside close, not there, next bar, 2 minutes out. We are 100 subs away from 102K. Can we hit it today? I don't know, man. That's a lot. Appreciate you, Joe. All right, 55 seconds out from the close here of this 2-minute bar. You guys know what I'm looking for at this point, right? Clean reversal scalps. Top third, lower third. And if we can get a nice little continuation scalp to backfill the range, whether that be long or short, near the middle third, like we had on that short setup, right? Selling here with a stop limit sell, roll over, push downside. Nice clean bear bar. That gives us an entry. Still plenty of room to the downside, right? That was our scalp. We can get that back to the long side, though. I gotta tell you, this bull bar is gonna kind of mess that up for us, I think. All right, we have a dual rollover coming. Top left 5 minute, top right 2 minute. Both rolling over in a minute 15. And it's like, it doesn't look like we're going to get a hell of a lot unless we get a big change during the next 70 seconds out of the 5 minute. The 2 minute, a little bit cleaner. A little bit cleaner. So let's head back to the 2 here. This is a 2 minute chart. A quick heads up, you guys remember this? Question that I have is, do we see that again? Just a question, it's not a tradable thought. It's just something I'm thinking about here. All right, looks like it's going to be pretty much a doji close here, next bar, 2 minutes out. That was also the rollover of the 5 minute. Again, top left of your screen, inside close on the 5, nothing there. So back to the 2 minute 50 out. We got 28 seconds here. If we get a nice bear close that's already through this wick low, which means any stops that were down there have already gotten taken out, push us to a nice bear close near the low of this bar, I would get long, risk a single ATR, which is about 20 points, 21 points. And look for a reversion back up into the range. Now, again, that initial risk, we're not going to get it. Inside close, big wick back upside, next bar, 2 minutes out. Now, that initial risk is not necessarily the end-all, be-all risk. Maybe we let it go that far if the bars call for that. But if you get a price action setup where it's like, oh, goodness, there's another very strong bear bar closing near the low, 13 points against us. The stop's at 21. Maybe I would just cut it there. Remember, we're scalping. We got to be liquid. You got to be... I like to think of it as like you're in port. And there's a whole bunch of cargo ships around you. Those are the banks, the institutions, the hedge funds. And if you're scalping, you got to be the speedboat that can run circles around everybody, in and out, be quick, but not emotional. You still have to have some kind of system, whether it's your discretionary decision-making, or it should be discretionary decision-making mixed with some kind of price action concept. At least for me, that's what it's going to be. Jose, you're going to get a lot of it, man. Pretty much every 2 minutes. All right, 40 seconds here. Remember this? Remember we talked about this? We had this going on, that flat top over there. Do we end up with a similar concept here? 25 seconds out, I'd really prefer for it to just say, nah, that's not going to be a thing, and close up here at 508, in which case I'd sell the rollover. And we'd figure out the risk from there. This is a little tight. But there's plenty of room in the range, even if we wanted to risk up here. Not enough out of the bulls to short yet. See if we can get another bar here closing near the high of the range. We'll find out in a minute 47. All right, let's do a poll. Just launched it, and don't you lie to me. You guys see what I am, man. Don't you lie. All right, let's see what we get here. Come on, bulls. Close it nice and high. 5 seconds. Limit order out. Limit sell. No fill quite yet. Beauty. And I'm going to actually keep this risk pretty damn tight, at least in the current volatility. Alright, so that'll be not quite as negative of a reward to risk trade, which means what? Probability is a little bit lower, right? Not below 50% necessarily, right? But it's going to be a little bit lower than when you're running reward to risk. That's natural. It's part of the efficient market pricing, relatively efficient market pricing of futures. Not quite as efficient as Forex. You don't want it to be efficient, because if it's perfectly efficient, we can't make money. It's not perfect. It's just not far off from perfect. I can see the bulls trying to test this this range here. We'll give him a little bit. We'll give him a little bit to test. Now it's time for the bears to fade this baby right back into the range. Range, right? That's what I gotta tell myself whenever we're in a range, until I get smacked across the face with a steel pipe that says, hey, dummy, it's turning into a trend. All right, ATR is 20, by the way. So we'll see if we can't get pretty much a full ATR. I'd like to get a full ATR, kind of as a minimum here. There's enough room to make that ask. Then we start pushing into the middle area of the range, though. All right, Bears, fade it back into deeper into the range. Good, good. ATR is 20. Looking to pull at least 20 here. Again, once we start pushing to 1 ATR, you start getting into the middle of that range. Probabilities start to shift a little bit. For me, that's a reason to take it off. We're scalping, right? I'm not swing trading. It's a range market. A few more points here, Bears. Beauty. 20.5 points. We'll pull it. Out there, next bar. 18 seconds out. Joe, thank you, sir. Good work, Vinny. Vin, how we doing? Good morning. Nico, how do you feel about rejection wicks like the 916? Candle, hey Vinny, are you out west? Talking about time, I assume. Yeah, you know, fine. For me, listen, guys, I think a lot of you guys who've been around for a while know what I'm going to say, right? When you see a shrinking bull body like this with a bigger wick, maybe about half the size, a little less than the full size of the bar, you could, if you wanted to, you're in the top of the range, you could short that. For me, I mean, oftentimes, right? Not always, but oftentimes I'd like to get maybe a small bear bar closing near the low for me to short. It depends on the width of the channel. But what happens here? You're getting in a little earlier, so what happens? Your reward to risk is better on average, and your probability is lower on average. Does that mean you don't have edge? No, not necessarily. It just means the numbers are going to look a little different. Your stats are going to look a little different when it's all said and done after 1,000 trade sample size, right? So it's fine. That's not wrong. You're just taking it a little bit earlier and you have a slightly different business model, slightly, on that particular trade. I mean, like, I don't know how many times I can say this. Maybe you guys need to hear it. Some of you guys need to hear it. Let's just look at the math here for a second. There is no such thing as, oh, that's the worst trade I've ever seen. That's a horrible trade. In futures on the Nasdaq, that doesn't exist. Now, there's a such thing as a trade that, depending how you manage it, probably had negative expected value, right? Did have negative expected value. Not probably, but did. But This is a two-way market. Without buyers, without sellers, you can't make a trade. Without both sides, you can't even participate. The market implodes, poof, ceases to exist. So even if the market is completely dumping off, if you see someone, not even necessarily me, if you see someone on YouTube getting long and you're in the chat like, that's the worst trade I've ever seen, you're wrong. Because the probability says at worst, at the absolute worst, that trade has a 30% chance of working. 90% of the time, at the absolute worst, it has a 40% chance of working. If that's the worst you've ever seen, man, that's kind of crazy. So probability-wise, as a trader, be a little more humble. You guys see, when I'm in a trade, I'm living in a fog. I never put a trade on. I might joke around and say, oh, I love that trade, baby. But I'm never putting a trade on like, that's the best trade I've ever taken. Of course that's going to work. Anyone else who shorts this long is an idiot, because that would be very, very short-sighted of me and dumb. And I've been in this game too long to realize or to think that that's still true. Any trade you put on cannot work, and any trade you put on can work. It's just a game of probability. There has to always be both sides. Yes, sir. Every single day. young man. Okay, listen. For options, the probabilities are a little different. I'm talking just a straight up buy or sell futures trade, okay? With options, there are extremely low probability trades when you go really, really far out of the money, but guess what you're getting? In exchange for saying, yeah, I'll take, a 1% probability or lower. In exchange for that, I want ridiculously high leverage and an absurd reward to risk ratio. And the seller says, all right, here you go. Here's your leverage. I'll take that 99.5% chance of me keeping your money. And you go, all right, you shake hands and you exchange. Is it a great bet if you're using a lot of your money to buy those calls? No, because it's a very low probability trade. But every once in a while, it's going to work and pay big. That's why there's buyers and sellers, right? Trader Sean, what account sizes do you normally use? I'm kind of sloppy, honestly. Not sloppy, it's very intentional, but I'm all over the board. I have a bunch of 50Ks right now with Apex. I have a bunch of 150Ks with Apex. I'm a big fan of the 150K Take Profit Pro accounts. I have a 250K at Apex. I have a 300K at Apex. These are all funded, by the way. And I have some 100K statics. I've had these 100K statics for, good lord, months and months and months and months. Long time I've had those 100K statics. Honestly, the static accounts at Apex, you have to start slow, okay? They're not, it's delayed gratification with the 100K statics, but they're kind of slept on. I like them. All right, new 2-minute bar here. Nothing on these last few bars. A lot of inside closes, as you guys can see. So just waiting for the next kind of signal bar here. 2 trades so far on the day, 2 winners. Up 3,600, as you can see on screen. Yes, today, just since I started the stream. Trader Sean, is that 3,600 divided by 4 accounts? No, I'm only trading about, well, maybe half. I'm trading like 13 accounts right now, which is group 1. I don't trade all my accounts at once anymore. As I get more and more accounts, I'm now trading them in groups to avoid, I'm kind of hedging copy trader glitches. I've had that happen in the past. Not with this copy trader, but with a different one. As well as just, you know, performance. Because there's going to be, sometimes you perform better, sometimes you perform a little bit worse. So you even out that equity curve. There's a very particular approach to prop trading that I like to implement. If you're someone who wants to copy trade, you know, 50 accounts and just go super aggressive, totally cool, man. If you're making money, cool. All right, let's see here. We got 10 seconds. Nothing there. Inside close. Next bar. Sean, downsizing your accounts. Trade a few micros per account. 50k apex, 3 to 5 is plenty. If you want to be able to add to positions, maybe start with 2 to 3 as your initial entry. And then scale horizontally. Meaning just trade more accounts. And everyone goes, oh, but that increases my expenses. Bro, how much money are you looking to make here? Stop being so fucking greedy with the ROI expectation. If you want to bet big, and you're like, I want to make $100,000 a month, or $20,000 a month, or $4 million a year while the prop industry exists, which who knows, man, maybe it won't in 5 or 10 years. Maybe it'll be bigger than ever. But the opportunity's here now, okay? Everyone's terrified of expenses, but then they're like, I want to make 10 million a year. Wrong mindset. You're not betting big. You're betting like a little bitch and then hoping to get a bunch of money for not taking any bet. It's not how the world works, man. Inside close, next bar. Yeah, I mean, Vinny, listen. The cost of evals and activation fees and all that, if you're making a lot of money from prop, it's gonna be a lot of money that you're spending. Those are called expenses. Like every successful business has a shit ton of. Right? You got payroll, you got advertising, you got legal costs, you got a whole bunch of bullshit. In trading, it's no different. You can't expect to come in, I'm gonna spend $16 on an eval, and Apex is gonna pay me $6 million. That's the equivalent of buying a lottery ticket. Treat this like a business, your expenses will go up, but guess what? It doesn't matter because you average a positive ROI per account and you're making lots of money. Greed is not having a lot of expenses and making a ton of money because you're all in on the thing. Greed is coming in and saying, I'm gonna spend 16 bucks, I better make 4 million bucks out of this. That's being greedy. But, you know, it's the equivalent, by the way, when you're buying evals, activation fees. It's no different than just losing trades in a personal account. Those are expenses. Losers in a personal account are expenses, and they're part of the game. If you're not losing, you're definitely not making money. Then, Apex accounts. Bought with code BIG, baby. Damn straight. 55 seconds out till we get the rollover of this 2-minute bar. Let's see what we get. Just found the channel. When you say closed inside, you're referring to the range? Or are you looking for longs or shorts? Just good setup? No, when I say inside closed, what I mean is like, look at this bar here. See how the bare body closed inside of this entire bull bar, including the wicks? That's an inside close. Meaning when you compare it to the price action 2 minutes ago back on this bar, it's indecisive. Neither side has really come to a conclusion. The market as a whole hasn't come to a conclusion compared to the last bar. So for me, there's nothing to do on that bar because the market can't even figure it out. There's no way in hell I'm finding edge there. So leave those inside closes. I always say leave it to the algorithms and the degenerates. Redneck, I have $16 and would like to exchange it for 4 million, please. Thank you. That's crazy, man. Now, really, you guys know I will. Some people out there like to shit on people's, I want to make a lot of money. And some people like to say, why do you want to make a lot of money? I'm not that guy, man. Life is expensive. We should all make as much fucking money in an ethical way as we possibly can. There's nothing wrong with that. Some people see that there's something wrong with that. There's nothing wrong with that. Again, ethically. But making a lot of money doesn't mean you're a bad guy. It means you're a bad person in general, right? As long as you're doing it in an ethical manner, giving back when you can. What I'm kind of poo-pooing on is this mindset. I want to get the world with extremely little risk. Buy a lottery ticket, man. That's your best bet. Okay, getting a bit of an outside close here, but this range has now developed. So I want to see one more bar. Let's see what we get on this next bar. If you want to get the world, you know, millions and millions of dollars for $4, buy a lottery ticket. That's your best bet for that to occur. If you don't want to do that, you want to actually treat this like a business, develop a business model, have an honest to God shot at being successful at this, yeah, you're going to have some expenses, whether it comes in the form of losing trades, market tuition, so to speak, if you're trading personal, or eval and activation fee costs if you're trading prop. Those are called expenses. Run a balance sheet. Keep records. This is a business, man. This isn't a game. You come in and spend $18 and make $7 million. If you're going to make millions of dollars trading prop, guess what? Your expenses are probably going to be really fucking high. That's the game. But it won't matter at that point because you're so profitable. It's like, who cares? Yes, I will continue to exchange $100 for $200. Of course you would do that. Take a bet, man. Bet on you. Unless you don't believe in yourself. "40 seconds out." All right, shrinking bear body here, coming into this little flat. Let's see here, bear's trying to push that through there. Take out some of those stops. It's a relatively short-lived level, not going to be a million stops, but certainly some down there. See, the bear's taking those out as we speak. Same scenario that we had back here. What was that? That was on this bar. Same exact scenario. In a trend market, if it closed right now, that'd be a sell setup for me. This is not a trend market. This is a range market. And this is one of those scenarios where it's a little tougher to manage risk. For me, the default is, all right, I'll risk one ATR because there's nothing under here. It's just open space. There's nothing there. Nothing to go off of. So I'll risk an ATR, maybe 18, 20 points. But I got to tell you, this exact scenario here is not my favorite trade in the world. Because we're in a descending, a soft bear channel with 3 consecutive bear bars. Even though it is a range market, and if you said you got to do something right now, I'd have to get long. Not my favorite in the world. This actually would have been a beauty of a short here. Couldn't take it in the moment. Why? This kind of thing was coming a little too obvious to the market. In hindsight, it ignored it, but that's hindsight, right? Big old bear bar, giant outsized bear bar, biggest range we've seen in maybe an hour and a half on that bear bar. So can I buy that? No. No, I can't, unfortunately. Next bar here, minute 44 out. A little too much strength there out of the bears. They're a little more cocky. I want the bears to get cocky so I can bet against them in a range like this, but not that cocky. That's a little too much confidence. And a little too much insecurity out of the bulls here, at least so far. Let's see how this bar closes. We can get a nice bull bar. Not massive, but a decent sized bull bar. Closing near its high. I'd be open to putting a stop limit buy above that bull bar. Couple of ticks for the rollover and see if we can get a fill long. But I want it to be going in my direction before we get that fill. So let's see here. Minute out. Yeah, see that? Really, really strong bear bar closing really close to its low. Even in a range, man, that's a little too much strength for me to be comfortable getting long. So that's why I'm waiting on this next bar here, even this bar here. Shrinking bear body. Looks like it's going to close near the low again. All right, next bar, 2 minutes out. These here are the kind of moves that I need confirmation to get long on. At least one nice, half decently strong bull bar closing near its high, buy above that with a stop limit buy. Blindly buying against this, let me tell you, years ago, got me into a lot of trouble a lot of different times, countless times. A lot of trouble. It's nothing to wait another 2 minutes to just see, hey, do I get confirmation? Or maybe this turns into a nice strong bear trend and I have to get short. Which, you know, I really wouldn't buy until 5 or 6 consecutive bear bars well outside of the range. Ooh, Vinny. Nico, if you could only ever do one-to-one or negative reward to risk. Vinny, I think I'd have to say negative reward to risk because you didn't specify, so that gives me a lot of options because I know that 70 to 80% of the time minimum, the market is in a range market. If it was 50-50 range and trend, I would have picked one-to-one, but that's not reality. More often than not, the market is in a range market, so I'd have to go negative reward to risk. Good thing we don't have to pick. Yeah, Joe. So Joe's looking at the 5-minute chart here. Let me show you. Top left of your screen, that 5-minute bar, consecutive bear bars, big, strong bear bar closing near its low. That being so damn obvious, though, to the bulls, I can't short it. I just can't do it. It's one of those scenarios where I have to overlook the signal bar on the 5 because of the context of the price action. There's just too much there giving the bulls a little bit of confidence. This is, by the way, a very weak bull bar closing near its low, but that's a start, okay? A minute 43 out. If we can get another bull bar closing near its high above this wick, I would get long using a stop limit buy 1 tick above this bar, but it's falling. Let's see. Let's see if the bulls reverse it here. I'm open to anything, man. I have no directional bias, just price action. Unless we're in a trend, then you have a little directional bias. Zay is asking, he followed up by saying he's not touching it, just curious. Blindly buying and blindly shorting is a bad idea. What's the logic? Going back to what I said earlier in the stream, nothing is a horrible, disgusting, awful idea. The market is two-sided, okay? There's always two sides. So, again, at worst, the worst odds you're ever going to get with a 1-to-1 ratio are 30%, 70-30. But that's only 10% of the time in the market. Most of the time, 90% of the time-ish in the market, the probabilities with a 1-to-1 reward to risk, just to make the numbers easy, are about 60-40. So the worst probability you're ever getting, 90% of the time, is 40%. 10% of the time, if you're really, buying against a heavy bear trend, it's about 30%. So nothing is ever a horrible, awful idea. Because then no one would be doing it. And then who's on the other side of your trade, right? There would be nobody. For me, trading the price action, we need to have a name for this because I feel like I'm saying this every day. Price action coupled with you know, considering the market context on the daily chart and intraday. Kind of a long-winded response. But for me, I need confirmation to get long after a move like that. Because the bears are a little cockier than I like. And we're outside of the range. So I often say, hey, I want the, you know, the bulls to get nice and cocky back upside toward the high end of this range, and then I'll short against them. Here, we already are in a soft bear channel, and the bears are feeling really good about themselves right now. So I need at least one nice bull bar closing as an outside close, meaning above this wick or this wick, to get long with a stop limit buy, which is still above that bar once it closes. 40 seconds out, we'll find out if we have some kind of an entry here. Well, let's get ready here. See if we get something. 20 seconds out. Move that away so we don't get a pop and a fill that I don't want. And then we'll hover over and see. Boom, plop it down. Up one tick. There we go. All right, we got a fill. Risk this curl. Show you the open P&L. A million things going on at once. Just see if we can get a nice, decent little push. ATR is 22. Again, that initial risk is just that, the initial risk, not necessarily the full risk on the trade. Boom, a little better than half an ATR. Let's see if we can get a fill in that limit, and we're out. Scalping. Scalping. Next bar. Minute 15 out. All right, 3 for 3 so far on the day here. Nearing the daily goal. Not quite there. Impulse Studios. Appreciate you, brother. All right. Good bull bar closing near the high. You can see this is another one of those kind of weird scenarios where now you guys see this. I would argue we're coming into this new wedge, kind of the lower end of the top third. If this was deeper, like this bear bar was smaller, this bull bar was smaller, but still above. This bull bar was smaller and maybe closed up here. Same look, but this bar ended up closing here. Same sizing, though. You guys know what I mean. I would have bought that. This is a little too high in this new wedge for me to be comfortable with the probability there. So, hold off. Next bar here, minute 10 out. And by the way, you know, no trader is ever going to be perfect, man. We're just doing the best we can, living in the fog. So if that's a trade for you, don't let me tell you it's wrong. I'm just doing what I think is the best discretionary call for myself in the moment. Of course, based on the context and the price action, but the discretionary decision making is also very important. It's just when you get a strong bear push like this, and then we come up toward the top end of the middle third, the lower end of the top third, it's like, well, this happened for a reason. Can I really reasonably expect a push all the way back up to this flat top? Maybe we get it. but not for me on that last bar. 22 seconds out, shrinking bull body. Let's see how this closes. Thank you, Vin. All right, inching our way back up here to the top end of that wedge. You can see it slowed down a little bit. That's what I was concerned about on that last trade that I passed up. Yeah, Joe, I gotta say, I agree with that assessment right now. Said range equals that descending channel from earlier. I think what's going on here is the bears tried to break out. Bulls are taking it right back in, saying, it's a range. It's a range, so we gotta let it establish itself again. Randy, appreciate you. Good to have you here. Edge Crusher, this is MNQ, the micro Nasdaq futures contract. And I'm copy trading them across a bunch of funded accounts. Oren, how we doing? Good to have you. Nah, Mario, I do not. I do not. You want to support the stream, man? Just, I don't know, like the stream, use code BIGBABY. Best deal always. Everybody wins. Yeah, Joe, that last 2-minute bar, man, ugly. Big wick. You can see it's kind of slowing down, right? Now, yeah, had I taken, I mean, hindsight's 20/20 always, right? We're living in a fog. Had I taken this close long, it just wasn't a great trade for me in the moment. Yeah, I'd be in the money, whatever, but it slowed down, right? Not big on that. I want to see how this range kind of establishes itself again. It would not surprise me at all if this becomes a thing. I mean, you look back. Roy! Bought 2 more 50k Apex evals. Just passed them both using the NQ technique. Thank you for your fantastic teachings. Roy, good to have you. All right, inside close there. Small little bare body. Next bar. 2 minutes out. All right, guys, I will be back in 2 minutes. Just grabbing coffee. Don't go anywhere. Back soon. Right, we are back. Okay. This would have been an okay entry for us, potentially. Not the best entry in the world, that would have been alright, but next bar here, minute 11 out. And sometimes life happens. You're gone for a few minutes, come back, you miss something. Big deal. Sit down, get back to work. Global, is there any activation fee with Take Profit Trader after I pass the eval? No. If you didn't use code BIG, then yes, you pay the activation fee. But with the code, you get the percentage off, which right now is 40% off the test, and then you don't have to pay anything once you pass. At Take Profit Trader. All right, there's a rollover inside close on that bear bar. You can see it closing right at basically the wick low of the previous bar. Next bar, minute 52 out. This is one of those weirder situations. You end up with this kind of thing. This kind of thing potentially right in the middle of a bigger range. Right, this look here. Again, I can't stress enough. I mean, I'm going to be straight up with you guys. When I first started trading, I kind of thought like, yeah, whatever, dude. Like, when I'd hear people say like, oh, screen time is really important. Isaac, I'm streaming every day. Same thing, every day we're doing it. Got a whole bunch of regulars here. Hope to see you guys become one of them in the chat. People would say, yeah, screen time, you know, you get better with your discretionary decision making. You recognize things over time and they repeat themselves. And I'd look at the market early on and I'd be like, none of this repeats itself. It all just looks like it's like random. Like, what do you mean? But I refuse to give up on it. And now today I can look back and say, oh, now I know exactly what everyone was talking about, because you see, it's not like you look at a picture of a chart and you're like, that pattern is this. No, it's more like in the back of your head, almost like your subconscious. You look at something and you're like, I've seen this before. And the bulls tend, on average, to lose confidence in this region. Okay. Let me look for a bear signal bar and get short. And what I'm seeing here is one of these scenarios where this is less of a clean rejection and more of a soft bear channel that could potentially form its own kind of new, smaller bear wedge, rather than looking at this whole thing. Right? Because, I mean, look at this bar. You get a big wick downside, then a nice strong bull bar in the top half of the channel. Are we just forming a new tighter channel as volatility closes or comes in throughout the day? Maybe, maybe. Maybe not. But that thought is enough to prevent me from getting short. So I get it. It's hard to really, you know, buy that. It's tough to believe that early on that you will get better with more screen time. But believe me, I was just as kind of confused by that concept early on as you might be right now, but it's very much so a real thing. But in the screen time, it's more than worth it. All right, 23 seconds out. Yeah, Annie, we're here every day. I stream every single day. Same thing, every day. All right, inside close, next bar, minute 56 out. Nah, Sam, that's across my first group. I'm only trading one group of my accounts today, but that's across them. All right, 40 seconds out here from the rollover this 2 minute. James, good to have you. Good to have you. Hope to see you more in the chat here. All right, inside close there on that 2 minute. There's just nothing there, man. Hands off. It's a lot of this until it's not, right? You know, I mean, listen, guys, I'm really not the guy. I mean, the whole stream is focused on scalping. I'm not the guy to come in and say you should take one trade a day, because that's not the business model that I believe in. The business model I believe in is find a little bit of edge, expand it over a big sample size of trades. So if there's 100 trades in one day, you better believe I'm putting them on. I'll probably miss some of them, you know, getting up, getting coffee, eating a meal, go to the bathroom, whatever. But I'll take as many of them as I can see. Now, most days here on NQ, we're not getting anywhere near that many. But don't get it twisted, man. Just because I've taken 3 trades today, we've taken 3 trades today, 3 winners. There's the P&L on screen so far. Doesn't mean I'm trying to trade a little. I'm trying to trade as much as the market lets me, but I'm picky. Got to be picky with entries. Second nature at this point, really. But you guys, I mean, you guys have seen already a few times today. There's some scenarios that it's tougher to get a read. It's like, yeah, I mean, you could go short on, you know, X bar, take your pick, but there's this other thing going on that causes me to not trust it as much, which probably means probability is a little lower than even I hope it is. So you hold off. Nico, what are you looking for? Well, I mean, quite a few things. We can get a strong bull bar closing near the high of the range. I'd be interested in selling that rollover. Has to look right, though. Not be an inside close. Not have a massive wick, ideally. Let the bulls get cocky, then bet against them. I'm looking for a breakdown outside of this smaller range to backfill the bigger range that we were just talking about not too long ago, which would require a few bear bars closing near their low consecutively. Yeah, we are getting close to 102K. I didn't think we were going to hit this today. We might. Subscribers, that is. All right, 53 seconds out here from the close of this 2 minute. Let's see if we get something interesting. Still an inside bar right now. All right, 7 seconds out here. Looks like we're going to get another inside close here. Big old wicks on the downside. You can see the bulls trying to defend that kind of flat bottom down through 23,430. Nothing I can do on that bar. Next bar here, minute 52 out. Retired. 2 more Apex with code BIG. Let's go. You know, by the way, I reached out. A lot of you guys were like, "Hey, Funding Ticks is a great firm," and I looked at it and I was like, yeah, "This looks really good, man. I'd like to trade with Funding Ticks." So I was looking through the rules and I was like, all right, I think I'm going to start trading with Funding Ticks as well. I also am starting slowly but surely to trade with Bullinox and Tradeify. So we'll see. Funding Ticks might be my stop number 5. Can you believe it? Stop 5 already. We were just talking about stop number 3 a couple weeks ago. And I was looking at Funding Ticks. And if someone from Funding Ticks is watching, man, I reached out to customer support. I was like, hey, you know, I'm interested. Can we get code BIG? That's the code, man. That's the only code that matters, right? And they're like, has to be 6 characters. I was like, then I guess I'm not trading with Funding Ticks, man. Come on now. A 6-character code. That makes your lives confusing. I do not like inconvenient things, man. I'm not doing big. Come on now. It's code BIG or nothing, baby. All right, another inside bar. Nothing there. Yeah, we'll get it, man. We'll get the code. I know we'll get the code for Funding Ticks. I know we'll get big. Well, hopefully we'll get big. But I went through the regular customer support. And they told me no, which is fine for now. All right, 60 seconds out here. Let's see what we get as far as a close. All right, Nelly, Wayne, I got you guys. Respond to that first text. I'll hit you guys back in a little while. Hey, Paul. This is the 2-minute chart. Dr. Zay, what if you got long here with an ultra tight stop loss? Seems like good RR. Yeah, that'd be good reward to risk. It's just probability on that trade would not be great. Right? It's always a trade-off. It's always a trade-off. Now, this is a concept that if you understand early, you'll, I think, progress tremendously faster. If you want a really, really high reward to risk, the market's pretty efficiently priced. Guess what happens? Probability, the higher reward to risk goes, probability drops. Doesn't mean you can't have edge. It just means you still have to make sure the numbers work when it's all said and done. All right, 21 seconds out here. Let's see what we get. Now, for reward to risk, if you take it super negative, guess what happens? Probability rises. Okay, now, there are small scenarios where you can get a pretty good reward to risk and a pretty damn good probability together. That equals a lot of edge, right? You can see here we're closing inside of this wick, inside of this wick, inside of this little what might become a flat top. Next bar, got to hold off there. Nothing I can do. But you know what happens in those scenarios when you get pretty damn good reward to risk and pretty damn good probability? The frequency falls off a cliff. It happens 6 times a year. Scalping, man. We're not looking 6 times a year. We're looking for setups that come 6 times a day. Yeah, Eric, I think it's helpful to think of it that way. If you have trouble, for the sake of the stream, it's you know, obviously everyone wants to see, hey, what's the P&L? So we show that. But as far as points, yeah, I think you should. It's a good way to think about it if you're scalping. I've said this in the past, and this seemed to make sense to a lot of people. I think a really tremendous goal, if you're scalping, is to take the day's range, and if you can make 25% of the day's range in points per day, you are a fantastic scalper. You're a great scalper. 25% of the day's range in points. If you can book that, on average, you're doing incredibly, incredibly well. Very well. And you can make all the money you could ever need. Now, a goal that is a very big goal, very tough goal, but would put you as one of the best scalpers on the planet. Which, why would we not shoot for that? You know, this is part of the reason why I like trading so much is because it's not like athletics. Like you can compete as a trader at a high level into your 70s, into your 80s. We have a long time to get better, okay? So you want to be a world-renowned scalper? The biggest goal, book, on average, the full day's range in points across all your scalps. Incredibly difficult to do consistently. But if you can do that consistently, you're one of the best scalpers in existence. But 25% of the daily range in points is a fantastic goal. And if you can get there, man, you're definitely not working anymore. Cool, Carlos. Good work. it up. All right, inside close there. Still waiting on the next bar here. 52 seconds out. Yeah, and listen, another thing about thinking about your profitability in terms of points per day rather than dollar amount is, and you know, I have to balance this too with I mean, there's other things that go into prop trading, like you have the drawdown, things like that. But thinking about your profitability per day or per week or per month in terms of dollar amounts, it's again, for the sake of the stream, I'm showing it, and you know, because obviously that's what everyone wants to see, and I want to show that. But I have to be careful, and I think you should be careful too, because it can keep you small, which is why I'm so dead set on, like, you need to think as big as humanly fucking possible, to the point where everyone around you thinks that you're losing your mind. Because otherwise all you're doing is you're putting yourself in this box where when you hit it, you're never going to outgrow that box. I'd rather, you know, shoot so big that you don't quite necessarily get there. You should try to get there, right? But even if you don't, you can still on your deathbed be like, fuck, man, we sent it, and feel good about that. But if you put yourself in a box like $100,000 a month or something, you're gonna get there if you stick with it long enough and you're progressing and you're disciplined and you maintain good emotional control and you don't give up. You're gonna get there, and then it's kind of hard to grow because you're like, well, this was always the goal, man. We're here. I just don't want to lose it now. Thinking about your profitability in points is I think more favorable because it's completely disconnected from dollar amount. You just increase the contract size, and the dollar amount is within reason, within, you know, liquidity in the markets, whatever you want it to be. So again, for scaling purposes, to avoid that kind of box-in effect down the road, I think thinking about things in points is very helpful. All right, nice little bear bar. See if we can take out this low. A couple of things that I'm looking at here. This has a potential, but also this. Okay, there's some stops down here that I think the bears are maybe going to want to see tested. But I can't short that because it's an inside close with this wick. Had this been a little lower, I'd think about shorting it, but still, we have this to think about, which could end up being a little problem here temporarily. Hussam, my opinion is that a good trader who get as much profit as he can, who cares how much points, yeah, fine. Fine, everyone's entitled to an opinion. I disagree, but there's problems. If you're in this for money, man, you're fucked. I mean, we're all kind of here for money, but let's be honest, trading is a fantastic way to challenge yourself for the next 60 years. And I don't know. Without a daily, without doing the hard shit every day, I think I'd be not a happy individual, which is why this is such a good fit. And I think a lot of people who end up being traders, they like to do the hard shit because life is intense. And we love it that way, fuck. But just concerning yourself with you know, the dollar amount, it can lead to issues. Like inverted data, just chasing the dollars. If you focus on the edge, you look at the points, the dollars come, obviously. All right, 90 seconds out here. Let's see how this 2-minute bar closes, coming into what could be a flat bottom here near the low, well, at the low of day. Curious. I imagine if we test that, we'll get maybe 5 points at least of through as it takes out those stops. Hey, man, ATR is holding up. ATR is sitting about 25, 26. This time of day, that is tremendous. All right, 30 seconds out here. Let's see. Here, I'll put my cursor right at the low of day, testing it. Oh, that got wicked right back up. Look at that. That was brutal, man. It went through 2 ticks, wicked right back up. Oh, you know those stops that were placed 1 tick beneath are pissed. I don't think that's enough through to take out all the stops, so let's see if the bears can give us a little bit of a better move through there. Kind of looking at this myself as kind of a reset. If we can get through and take out those stops, then maybe the bears will be happy and we can look for maybe a little reversion setup with a bull bar closing near the high to backfill the range. That's what I want to see right now. But first, the bears got to clear out those stops. Let's see if they can. Minute 25 out, still some stops sitting down there. You know they're there. You know they're there because a lot of those stops are going to be about a point beneath that wick. That's typically what I'm running, is maybe a point. If you're trading ES, I think putting, you know, your stop a tick beneath the wick makes sense. On NQ, if you do the math, I think it makes more mathematical sense to use a point, but you can use whatever you like. Andrew, 33 bucks from a Bullinox funded. Good work. Switching to micros. Yep, take it easy. Get across the finish line. At least do your best to do so. All right, still those stops still sitting down at that little double bottom, little triple bottom, you might call it. We only ever really got a tick or two beneath this wick back here. It's hiding behind the P&L, but that wick is essentially right there. 23,390. I'd like to see the bears push us all the way through, take out the rest of those stops. You know those bulls with stops down there are sweating right now, to say the least. Andrew passed that eval. Good work. Good work, guys. Man, so many of you guys are getting funded. Love to see it. All right, guys. Well, as this teases the low, man, I gotta hit lunch. I'm past mealtime. So I'll tell you guys what. I'm $297.50 shy of the daily goal, but of course I'm gonna trade my own this afternoon and see if I can pad this up a little bit. The daily goal is kind of just a rough goal. It's not like set in stone or anything. Obviously, I'm trying to, blow it away every day, but we can only really take what the market gives us here. At least, me. You guys know I'm relatively picky with the entries, though I think I need to be. Trading's hard, man. Can't be too loose. But you guys have also seen me add to winners, add to losers when I think it makes mathematical sense to do so. I'll do both. So sometimes it might look like kind of loose, but I mean it is calculated, believe it or not. But here's where we sit so far on the day. 3 trades so far, 3 winners, $4,700 so far. So I gotta go hit lunch. Come back, trade the afternoon. If you're not in the free Discord yet, go to wrenchcapital.com/Discord. Join the free Discord. Come hang out. 100% free. I'm not going to charge you to join a hangout spot. I mean, come on now. We're just hanging out, trying to get better. So, all right, guys. Hey, use code BIG. Best deal always. Take profit trader. Stupid good deal right now. Apex, 80% off single day pass, and Tradeify if you're sick of trying to pass evals. Or you have a positive ROI per account and you're like, I can make these numbers work. Let's just hit them and use them as another revenue generating source. Lightning funded at Tradeify lets you skip the eval. Use code BIG over there as well. And it gives you 35% off the Lightning fundeds. All right, guys. Have a great afternoon. Be patient. Let the trades come to you. It's a lot of this until it's not. But when it does come, fucking hit it hard. All right, guys. Have a good one. See you tomorrow. Subscribe.